All right, and we are live. Welcome to Anchor Point Trading Adventures. I'm going to tell you a little bit about what we do here. I'm going to kind of take you through my weekly process of how I select my trades. This has been a crazy, crazy week, and so I'm not expecting to find a lot of setups, but the reason I'm doing this is because, well, I've been trying to figure out the trading game for the last 8 years, and about 2 years ago, year and a half ago, I've gone down every avenue you can think of with every guru and every book imaginable, and I've looked at everything from derivative markets to futures markets to the equities markets, and I've learned a lot over the years. Most people give up within the first 1 or 2 years of trading. I kept my head above water. I prioritized keeping my equity afloat and not blowing up my account like most people do. And I think as a result, I was able to maintain the patience to stay in the game for long enough to learn the game. And now that I've learned it, I want to tell people a little bit about it so that you don't end up following some kid on YouTube that has no idea. I find a lot of these kids are following just the technicals, and they'll tell you to look for a setup, and once you see that setup, you go ahead and buy. It's a little bit more than that. It's like drinking from a fire hose at the beginning. It's a lot of information when you're first learning, but like anything you're learning, it gets a lot easier with time. So have patience and just keep on going. Okay. The market last week was just complete chaos. I'm going to take you over to this other screen here and just show you. Um, show you. Oh, hang on now. Technical difficulties. There we go. So this is the volatility index. It's been relatively quiet for some time. I'm going to get rid of some of this noise. I do apologize for the noise there. But you can see we had a blip, a big blip. This is the fear index. Type in VIX into your trading view. Anyone can go to tradingview.com, open an account. I myself use the free version. You don't need much more than that. But it is a bit of a learning curve to get you started. Once you learn it, though, it becomes a very, very good tool to use. So, volatility index, it shows the fear. Not that I check this stuff anyway on a regular, but it was such a crazy week. And even the week before that, my trades weren't working. And typically when trades aren't working, it means you have to scale back a little bit. So, and I have been. I'm 100% in cash right now. So the opportunity that I'm looking for has to be pretty damn perfect at this point. You can see look at the volume. You can't see it because let me just see if I can move myself here. Let's move myself over here. Okay, you can see the volume down here. See that there? That's pretty hefty. Pretty hefty volume, I have to say. It doesn't even fit into the rest of it. That's a big sell-off, guys. That's a massive sell-off. Look at that volume, 60 million shares traded. This is, of course, on the S&P 500 futures. Let's look at the rest of the indexes. You can see again, huge volume here. Lots of trading going on. Now, the color of this, I want you to remember that this just represents the candle here. And so the color only corresponds with the candle. It doesn't tell you if it's, some people think if it's all red, then you have a lot of sellers. Well, yeah, if the candle closed that lower, then yeah, that might be the case. But you just kind of ignore that. The point is there was a lot of trades, a lot of people trading. I mean, if I take you back This is where we were. This is the extent of lots of trading was over here at about 2.5 million. Now, what could have spooked the market to make 120 million all jump in at once? Okay, so, with that said, I'm going to move on now to screening the market. I'm going to just look for some opportunities. Even in the worst of cases, sometimes there will be one gem that comes up that is doing so well in the market that everyone flocks to that. Mind you, it might be shorter term during these situations, but nonetheless, we're gonna take a look and see what the opportunities are showing. Okay, so this is the screener that I use. It just makes life a little bit easier. I do pay for this, but you don't have to. If you're looking for how to get started, like I said previously, I've been doing this for about 8 years, trying to get my footing, and now that I have it, I can point you in the right direction. Go read Mark Minervini's books. Go read them over and over again. I must have followed 12 different gurus in my time trying to learn the market. Puts and call options. I've done futures markets, penny stocks. I went through that route too with Tim Sykes and whatever else. Martin Pring. And Martin Pring is he knows what he's doing, but just wasn't for me. Mark Minervini was trained by William O'Neill, and the lineage of these traders goes back. These are career-long traders. Okay, and I don't know why it took me so long to find them, but I did, and I'm glad I did. Yeah, I'm trading much differently than I used to. So, and I do post my my trades and where my equity is. I'm still a beginner, guys. Okay, but I can tell you I've been doing it for 8 years. I used to listen to this podcast called Chat with Traders. I think I listened to over 100 podcasts. I stopped listening now. They're still probably going, and it's probably more than 100 now. It's probably upwards to 200, I'm guessing. But one thing that was a common theme with everyone who traded and everyone who was successful at it is everyone either blew up an account and kept going, or they didn't blow up an account, which is a rare case, like myself. I'm very lucky that way. I've had some bad experiences, but I've never lost everything. A lot of people do. So be careful. You should be paper trading at the beginning until you figure it out. But anyway, one of the themes that came out from Chat with Traders is everyone seemed to take anywhere from 5 to 10 years to figure it out. And I can tell you from personal experience too, it was about, I think, 6 years into it that I figured it out. 7 years into it that I started going in the right direction. And now that I'm here, the sacrifice was worth it. Just I'm hoping that I can save you some time so that you don't go down all the dead ends that I went down. Just look at Mark Minervini. Out of everything that I've seen, no one does it better. Did I mention that he is the U.S. investing champion, and he has a record for the equity achieved over a year? And his students tend to hold some of the highest positions in the U.S. investing championships every year. In fact, this year, I think in all 4 divisions, Mark Minervini's students are holding all of them. So, yeah, let the record speak for itself, because I don't have to convince you. You just go check them out, okay? But anyway, that's not what we're here for. We're here to screen the market, and I'm just going to show you what I'm looking for. Essentially, I'm looking for a volatility contraction pattern. And I think what I'm going to do, I'm going to keep this episode very short, and I will kind of go through this. You can see how quickly I go. This one looks interesting. And what I'm going to do is I'll maybe pause the recording and come back to anything that I see that's notable. Dogs is notable, and I'll tell you why. Let's put this onto the other screen for a minute. Okay. Let's move this over to the other screen. Are we there now? Oh, it looks like we are there now. There we go. Okay, still getting used to this. So let's take a look at dogs here. What I like about it, and I'll show you how I have my chart set up here, is up here you can see that's the S&P 500. Okay, so what I like about it is that this was moving up as the S&P was moving down. That's called relative strength. And more than that, between this peak and this trough, I have about 7%. So that would be my risk if I bought it at the breakout here, because I would want to at least hold it above that percentage. No, above, if it gets down to this point here, this would be my stop loss. So it would automatically sell at that position. And then essentially we let it ride. And by that I mean we watch it, we assess whether it's behaving the way we want it to, and if I get red flags, I typically sell it off. In these market conditions, I'm a little quicker to do that. I don't like to take much risk during these market conditions. And I'm going to be completely open about my failures and my achievements, because I want you guys to see what it's really like. So, you know, I hit up to, I think, 11% within a month and a half, because I was trying to get my footing. Last trading session, I ended up losing all of my gains, and so I'm getting better at that, and I'm improving at reading the market signals and taking them seriously. I remember calling my friend up last time, and I told him, man, I was 75% exposed, and I didn't read any of the market cues. The market was tumbling. And I'm not looking at the S&P 500 to determine that. I'm looking at my own stocks. This is what Mark Minervini teaches. So just look at your own stocks, and if they're not working, then the next purchases, the next round of buys, you can either hold back and be a little bit more selective. You can tighten up your stop losses, or just wait in cash. I mean, if it's really bad, just wait in cash. You don't have to be invested all the time. You can wait until the opportunity is the right opportunity, and then you can go in. So anyway, with that said, this video is ending up a little bit long, so I'm gonna fast track past this, and then I'll come back to what stocks I thought were good this week, what I'm gonna look at for this week, and then I'm gonna give you a summary, because we're going on into 13 minutes here of recorded time. I don't like to exceed 15 minutes, but it looks like we might here. Okay, here we go. I'm gonna put this on pause, and I'll be back with some just some of the summaries. Okay, and we're back. I'm going to do this last part with you guys. I'll be honest, there's not a lot of setups. I'll show you what I found, though. Chances are if I take any trades, I'm probably going to be in and out. But I'll show you what I found anyway. PGR is one. You can see the S&P 500 relative to that. It's been holding rather strong, and I do like seeing that. The earnings forecast looks good. Now keep in mind, these are just analysts. And one thing you don't do as an analyst is step outside of, you don't get too brave. You generally as an analyst want to stay kind of within the same parameters of other analysts, because you don't want to stand out. It's a job like anything else, and you start making huge estimates and you get them wrong, then you're going to get noticed in a negative way. So, and analysts generally tend to be a little bit general in their approach, and they don't don't take them, take this with a grain of salt. Don't, you don't know where the company's going to go. That's why surprises are so great, because analysts like to stay general. When you have a surprise in earnings or sales, then it just shows that the company's making a lot more than the analysts can't keep up. So what I really like seeing is an increase in the velocity of the earnings or the growth relative to what the analysts are saying. But we generally don't take it. We take it with a grain of salt. But I do like seeing these estimates really, really high relative to the 2023. Look at this. I always like to start with annual just to kind of get an overview picture. But if this does happen, I mean, this 2024 is going to be a breakout year. We call it a breakout year. That's a huge improvement from prior years, and we're always looking for growth. There's also a 2023. There's 2024 so far. These are the blues that reported. So it's looking pretty good. And then revenue. So this is earnings per share. This is revenue. These are the sales, right? This is the money coming in, flowing in. And I like seeing that too. Look at that. Look at that growth. This is what I'm looking for. But then the other part of it is, how tight is this? Is this less than 10%? Oh, it's very tight. Oh, boy. Oh, boy. I might actually take that. Okay, let's see what industry they're in. I'm curious. Finance, multi-line insurance. Yeah, I bet they're making a killing right now. And then the other thing I want to look at too is, this will tell me how big of a mover it is. Float shares, or share floats. Shares float, 583 million. Generally, I'm looking for something closer to 30 million. So, and how it works is basically, if you have more shares floating between investors, more is out there, then you'd have to buy a bigger portion in order to move that market. So generally speaking, these higher share floats at 583 million, for example, they tend to move a little bit slower, just like those blue chip stocks, some of the bigger names, the big companies, the household brands that everyone knows about. Those generally tend to move a lot slower than some of the new ones coming out that are a little bit lower in float size. But anyway, so I'm going to put this one on the list. I'll keep that in there. Dogness. I was looking at this because I like the tightness, and I like how much it's come up over a short period of time. As soon as it comes up past that 100% point, I'm happy to see that. There's my percentage right there if you don't know where I'm looking. But with that said, I mean, look at this massive drop previously. And it did come down, peak to trough 44%. I don't like that. Not when the market was going up. I don't know what's going on with it. I don't like it. Getting rid of it. This one's interesting. This looks like I could possibly be a super performer as well, because it rose up. Look at that. There's the 100% line. That makes it a power play. I do like me a good power play. I'm curious as to peak to trough on this. 8%. Still setting up. I'm going to put this into my list. This is healthcare too. So whenever we're looking at healthcare, pharmaceuticals, it's nice to see. Oh, look at that forecast. Okay, 16 analysts. It's nice to see earnings, but we don't expect it. That's the one thing that you don't need to worry about is pharmaceuticals. They don't necessarily need to have perfect earnings. But look at this revenue. Projected revenue looks great on this one. So this is INSM. Okay. I'll keep that on the list. Moving on. What do we have here? Soleno Therapeutics. Yes. Okay. This is another potential. Oh my goodness. As far as super performers go, this one is insane. Look at that. Is that really holding up at 583%? And by holding up, I mean after it made its peak, it didn't drop below that line. And she jumped up from here. What is going on with Soleno? let's dive into this a little bit. Soleno, inspired by patients and families around the world, we are working to develop and commercialize novel and much needed therapeutics to rare genetic disorders. Okay, looks like they work directly with genetics. I'm not sure. I mean, that's an area you'd need to be an expert in to completely grasp, but I get the gist of what they do. This passed already. No events coming up. Press releases. Interesting. Soleno, I'm keeping you on my list. And you know what? That looks like... Is that tight enough, though? That's a little bit outside. That's a little bit high. So this just means that if I put my entry in here, my stop loss, a technical stop, would be... It would have to be 10%. I'd have to go in with a really small position. Okay, we're just going to leave that. CRBP, this has been a nice super performer in the past. Power play. She looks like she's setting up again. 132% up to this point. It's held up at 236. Okay, and with power plays, you want them to generally set up with within 2 to 6 weeks. So in this case, it was so this would be 1 week, 2 week, 3, 4, 5, 6 weeks. Let's not get too far into it here. Sometimes you can get information paralysis. Let's look at the basics here. That's healthcare, health and tech, and pharmaceutical. Just going to come down to the forecast here. All good projections. Remember, it's pharmaceutical, so we don't necessarily need earnings. They are projected to start seeing some good revenue in 2025, though, $3 million. They are profitless currently. They must have something in the pipes. Something good, anyway. What do we got here? Let's see what they do. Let's see. If it doesn't come to me quick, then I'm going to move on. We'll come back to this another time because I'm tired and it's late. The other thing I added was gold. CRBP, you know what? Hang on. Let's just finish up here. How tight is that? It's not ready. Even if I wanted to, it's not primed. Might keep this in mind for a day trade or something. Earnings is coming up. A lot of these are actually coming up for earnings. See, like 4 days. This one's in 3 days. CRBP is in 4 days. It is earnings season after all. This is gold. And then Fresh Pets was the other one. Earnings is tomorrow. So it did dip down. However, I mean, it's made a pretty good run. What I don't like is the many closes below the 50-day moving average here. That's the red. I should probably put this down so you guys can see. No, that doesn't help at all. I'll just tell you what it is. This is the 50-day moving average. This line right here, the red. The green is my 20-day. Okay. Anyway, if you guys have any questions, or if you want to kind of talk about, let us know what your story is, how long you've been investing, and tell me about your struggles, man. It's not an easy world to get in, or else everyone would, right? But it's definitely worth it if you can make money doing this. A lot of times the revenue, if you can keep it, I mean, anyone can make it. Anyone can get lucky. Anyone who jumps in on a bull market could simply just put money in on almost anything. And the strongest bull markets, almost everything is going up. So, I mean, realistically, anyone can make money in the market. The question is, can you keep it? Can you maybe hold back from giving it all back to the market? And that's the difference between a good investor and a bad one, an amateur and a professional. Okay, so I'm not even going to look at Simmons because, well, I mean, I'm really giving into my tiredness here. We got one more. Let's just get her done here. Annuals look like crap. We've got no earnings, and it's not a pharmaceutical. Real estate's going to crap anyway right now. That's my opinion. I mean, don't take that for what it's worth. Listen, no one can predict the market, okay? I don't care what the experts say. I don't care what CNBC says. You just follow the charts, follow the earnings. You'll be fine. You don't need expert opinions, including me. Go out there and I'm just showing you what I do. Okay? That's all I'm doing here. You guys want to go out and learn on your own and become an expert in this for yourselves so that you don't need anyone else. But anyway, I'm going to wrap it up. That's it for today. Thank you for joining Anchor Point Trading Adventures. Until next time, trade on and trade hard. All right? But be safe out there. It's we got some rough seas ahead. I'll tell you that. Good night, everybody.